Alright, fans, hold on to your seats, because we're not easing into this one. We're blasting off straight into the chaos that's gripping the crypto world right now. On this electric night of January 15th, 2026. Bitcoin's clinging to that razor-thin edge around 96,000 to 96,790 as the latest ticks roll in. After teasing 97K plus highs earlier today and dipping below 96K during US hours like a fighter catching his breath after a brutal round. The charts are screaming tension. Green candles fading into red hesitation, volume spiking then retreating. This isn't a random dip from over-leveraged longs or some shadowy whale exit. This is pure geopolitical thunder. The rocket stalled because Washington just threw a massive wrench into the engine. We're talking the Digital Asset Market Clarity Act. The Clarity Act. Not some obscure rider on a spending bill. This is the heavyweight championship fight for the soul of crypto regulation in America, and by extension, the globe. The successor to last year's Genius Act, which finally gave stablecoins a federal framework, Clarity was supposed to be the grand finale. Drawing razor-sharp lines between SEC securities oversight and CFTC commodity turf, unlocking DeFi pathways, shielding developers from endless enforcement nightmares, greenlighting tokenized real-world assets, staking rewards, mature blockchain certifications, investor safeguards, the works. Imagine the trillions locked in traditional finance, pension funds, sovereign wealth, corporate treasuries, Wall Street giants, staring at crypto like it's the next gold rush but terrified of the regulatory minefield. No clear rules mean lawsuits, uncertainty, frozen capital. Pass Clarity strong, and the floodgates open. America's open for business as the crypto capital of the world, as the Senate Banking Committee Republicans have been framing it in their fact sheets. Trillions on the sidelines waiting for that signal. Fail it or water it down into something toxic and we stay in this gray zone. Offshore havens win, innovation flees, institutions hesitate. The Senate Banking Committee, chaired by Tim Scott, RSC, had the markup locked in for today, January 15, 2026. Debates, amendments, 137 proposed already. Votes, the full spectacle. Bipartisan negotiations stretched over 6 months, building on the House-passed H.R. 3633 from last summer. Everything lined up for a historic push forward. Then boom. Late Wednesday night into early Thursday, Brian Armstrong, Coinbase co-founder and CEO, the most influential voice in compliant crypto, unleashes a scorched earth tweet thread that sends shockwaves. After reviewing the Senate banking draft text over the last 48 hours, Coinbase unfortunately can't support the bill as written. There are too many issues, including a de facto ban on tokenized equities, DeFi prohibitions, giving the government unlimited access to your financial records and removing your right to privacy, erosion of the CFTC's authority, stifling innovation and making it subservient to the SEC. Draft amendments that would kill rewards on stablecoins, allowing banks to ban their competition. We appreciate all the hard work, but this version would be materially worse than the current status quo. We'd rather have no bill than a bad bill. Within hours, Senator Scott postpones the markup. No new date announced. The executive session? Scrapped. Everything frozen. Bitcoin slides below 96K in real time as the news hits wires. Altcoins turn crimson. The market inhales sharply, holds its breath. This isn't drama for clicks. It's seismic. Coinbase isn't some fringe player. They're the poster child for regulated crypto in America. Licensed everywhere, massive political donor, deep bipartisan ties. When Armstrong says, "This breaks more than it fixes," lawmakers snap to attention. His pullout isn't just opposition. It's a veto-level signal that the draft is fatally flawed. But dig deeper, because the real battlefield isn't Coinbase versus Congress, it's crypto natives versus the entrenched banking cartel. The explosive core? Stablecoin yield and rewards. Coinbase Golden Goose. Their distribution deal with Circle, USDC. In 2024, Circle paid Coinbase nearly $1 billion in revenue sharing from USDC reserves. Coinbase pockets 100% of interest on USDC held on-platform, 50/50ths off-platform. Treasuries yielding 4 to 5%? That's effortless, high-margin cash. They share some as user rewards, far outpacing bank savings accounts at 0.3–0.5%, and keep the spread. The draft clamps down. Prohibitions or severe limits on sharing interest/rewards on stablecoins. Not just issuers, exchanges, affiliates, partners. Every pathway sealed. Why? The American Bankers Association and 52-plus state/community banking groups lobbied ferociously. Letters to senators warn. Competitive stablecoin yields equals mass deposit flight from banks. Kansas City Fed models show 25.9% deposit loss, $1.5 to $6.6 trillion in lending capacity vaporized. Community banks collapse. Businesses can't borrow. The system disrupts. Banks model exposed. Borrow cheap from depositors. Lend/invest higher. Pocket the margin. Stablecoins flip it. You earn the full treasury yield directly. No middleman skimming. Disintermediation nightmare. Elizabeth Warren piles on with 38 amendments. Heavier AML, sanctions, compliance, stripping developer protections. She's the bank's frontline warrior. Coinbase fights tooth and nail because yield death craters their economics. Circle might pivot, they're more supportive. But Armstrong? No way. He calls it straight. Regulatory capture. Banks thumbing the scale to kill competition. Innovate or get left behind. The rest of the industry. Split. Andreessen Horowitz, Kraken, Ripple, Paradigm, Circle, Robinhood's Vlad Tenov, they're pushing hard for passage. Staking unlocked, Robinhood craves it. Tokenized equities, clearer DeFi rules. Chris Dixon. Builders need roads. Vlad, US must lead. But Coinbase influence is nuclear. One giant says no and the process halts. The pump? Stalled hard. But look at the undercurrents. It's not dead. It's coiled. Bitcoin ETFs? Still pouring in billion-plus weekly inflows. We're the number 4 best-performing major asset YTD. Rebounding from last year's correction lows in the 90s. Silver leads, but BTC's catch-up is ferocious. Funds chase calendar returns. Hit 100K, and allocators scream, how do we not allocate to the outperformer? Funding rates negative while price grinds higher? Shorts loading up. Takers buying aggressively. Sellers exhausted. This is textbook mother of all short squeeze setup. Break 97K, 98K resistance, and we rocket toward 100K like a missile. 100K isn't fantasy. It's the magnet pulling us. Macro tailwinds roar. Risk appetite returning. Perps yield climbing. Institutions flowing despite the drama. What happens to your bags in this storm? If clarity passes strong, Polymarket still implying decent odds, though dipped post-delay, watch for bounces. Winners explode. Bitcoin solidified as digital gold/commodity king. Compliant platforms. Coinbase, Kraken, gain moats. Staking ecosystems unlock. Robinhood dreams. Tokenized RWAs flood in. DeFi with real guardrails thrives. Mature blockchains certified. Innovation surges. A losers bleed. Pure privacy coins like Monero, illicit anonymity crackdowns. Monero spiked on stall news for relief. Heavily centralized tokens, Arbitrum, Optimism, Uniswap governance, Lido, BNB. If greater than 20% insider control, securities hammer drops harder. If it dies, waters down, or drags into midterms chaos. Privacy coins, Monero, Scash debates, breathe. Scash potentially edges out on compliance angle. But broader pain. Perpetual SEC shadows, lawsuits, offshore migration accelerates, institutional FOMO delayed. No clarity equals continued uncertainty tax. Other fireworks. ICP surging on 70% emissions cut by 2026 end plus AI tooling hype. Alt season lurking, waiting for macro/reg clarity trigger. Are Pionex bots? Absolute beasts. Silverbot flipped 50K to 133K plus since October. Free Discord in the description. Join for commodity, gold, stock bots crushing it without emotional human interference. We're forging ahead with AI2, Jax, our charismatic AI host, unleashing fire on the Mag 7 of crypto. 7 altcoins primed for legendary 250x. Style runs mirroring S&P's magnificent 7 since '05. Video link below. Watch, absorb, position. Portfolio update. Holding firm in Lido, early but convicted. ENA, Scash. Minor stall drawdown, no panic. We surf waves, not chase ticks. This is the moment. Fam clarity drama is crypto's biggest near-term catalyst or killer. Track Polymarket, odds fluctuating but resilient. Armstrong's feed, Tim Scott, Cynthia Lummis, Warren amendments. Negotiations grind in good faith, but stakes are existential. Midterms loom, Republicans hold House/Senate now, but 2026 House flip risk is massive. Pass before chaos or risk Dem blockage. Bitcoin at 96K? Not the peak, the launchpad. World awakening. Institutions pouring in. Banks clawing for survival. Builders raging against capture. Privacy warriors fighting back. We're ringside in the arena. Pulse racing.
Charts pulsing.
This is crypto's war for tomorrow. Trade with fire, stay razor sharp, hold iron conviction. Tomorrow we reload. Until then, let's seize history.